2022. A new COVID variant in Omicron and potential monetary tightening meant the new year has started on an uncertain note. But guess what? A PwC survey shows 99% of India's CEOs foresee better economic growth this year. 94% of global CEOs are optimistic about global economic growth improving this year compared to 77% last year. So what is fueling this optimism amidst the uncertainty? How will 2022 shape up for India and the world? We've just wrapped the jury meet for the 17th edition of the India Business Leader Awards. The A-team of India Inc. picking the best in business, and we will reveal the winners in a few days from now. Joining me now to discuss the year gone by and, more importantly, the outlook for 2022 and how we can navigate the tumultuous times that we live in is the IBLA jury. Starting with Lakshman Narasimhan, the CEO of Reckitt Benckiser and the head of the IBLA jury for the 17th edition. Also with us, veteran banker Uday Kotak, who has been a member of the IBLA jury for many years. Nestle India's head Suresh Narayanan, Biocon's Kiran Mazumdar-Shaw, Standard Chartered's Zareen Daruwala, Sanjeev Bikhchandani of InfoEd, Salil Parekh of Infosys, and SoftBank's Monish Verma. Ladies and gentlemen, many thanks for joining us here at the 17th edition of the India Business Leader Awards as we talk about navigating 2022. Lakshman Narasimhan, let me start by asking you, what do you potentially see as red flags on your dashboard as of today? Are you in the optimistic camp, the CEOs that believe that 2022 is in fact going to be better than the year gone by? Take me through what the outlook is.
I'm deeply optimistic as a person, so I'm wired to be optimistic. But having said that, I think we're living in an era of global deceleration and tightening. And against that, on my agenda, I worry about inflation, particularly seeing the increases in commodity costs and some of the fallouts of what's happening geopolitically, which means, of course, pricing is a very big area of emphasis for us. The second is supply and supply resilience. The supply chains of China to the US, for example, have essentially doubled in length. And how we ensure the supply chains are resilient and how we ensure products are available to our customers is a big area of focus. The third is we're moving hopefully to an era of moving from an endemic, from a pandemic to an endemic type of an operating environment, which has implications for demand for businesses that we own, but also for our workforce and how we engage our people. And all that is happening in an environment of digitization that's multi-year in its making, as well as sustainability and our commitment to it. So that's really on my dashboard in terms of how I think about business. Deeply optimistic. I know that 2022 will be tough, but I think we can certainly do better.
Well, it is going to be tough and it is going to be challenging, but I just want to pick up on one of the issues that you spoke of, Lakshman, before I get Mr. Kotak in on the conversation as well. And what you said there in terms of supply chain resiliency, how much of the disruption and the dislocation do you believe has already been factored in? And do you believe 2022 is going to be a far more smoother affair when it comes to supply chain resiliency?
I don't think it's fully worked itself through. I think if you just look at container movements around the world, we still have dislocations that are going on. We hope that over the course of the year things will normalize, get better, but it does depend a bit on how the pandemic shapes itself, because it has a big impact on China's supply chains. It has a big impact on ports, and clearly we're all learning how to live with it. But I think it will be a sort of a evolution over the course of the year till it gets better over time.
Okay, so widely optimistic Lakshman Narasimhan. Mr. Kotak, let me start by asking you that. How optimistic are you about the year ahead? And I want to understand from you what you make as far as the inflation problem is concerned. Over the past 12 months, you and I have spoken on several occasions, and you've been giving the boy cries wolf analogy, saying that, look, when the time comes, people won't believe it and it'll be too late. Where do you actually see the inflation trajectory now, and what is it going to mean in terms of rates? What is it going to mean in terms of money flows?
So I think, Shireen, really three parts. First, I just went off. Shireen, the first part really is on this printing press called global central banks. The time has come for us to really ask whether we can keep on printing currency and expect that it doesn't have any consequence. So I think the US and the US Fed, to start with, is beginning to realize the impact of so much of printing of currency in terms of what it does to the world. And as that corrects itself, we will see interest rates go up. The question is, we need to ensure that it's not a very hard landing, but a steady situation where interest rates go up without disrupting economic growth. And that is, I think, the single biggest challenge for governments, policymakers, and central bankers. And if we get that landing right, you could have a gradual rise in interest rates and economic growth continuing. Therefore, I am of the camp, steady increase in interest rates, but it is possible for the economy to continue to grow. And as far as markets are concerned, the long bond is already beginning to price in higher interest rates. And at the short end, in the equity markets, you will see a change in the mix from companies where the cash flows were very, very much into the future, getting valued at high PEs, to more modest PEs, and some churn towards companies which benefit from inflation.
I think it's a given that the Fed is going to act. The question, though, as you point out, is will it be disruptive in its action? Because many argue that the Fed is already behind the curve. What's the expectation on the rate cycle? And more importantly, what will that mean as far as emerging market flows are concerned, Mr. Kotak?
So the jury is out, but looks like 3 to 4 rate cuts. And more importantly, how fast the Federal Reserve shrinks its balance sheet. That's an even more important point. Also, sometime by second half of 22, the ECB also will have to start moving. But the most important point is, besides the monetary side of this, as Lakshman rightly pointed out, we need to fix the supply side. Because if we get the supply side better, then at least we have goods and services at a price.
Yes, supply chain disruptions have caused havoc through the course of the last 18 months, and the hope is that we will see stabilization as far as supply chains are concerned. But Zareen, how many rate hikes are you factoring in? And more importantly, which camp do you belong to, the optimistic camp or the widely optimistic camp?
I'm in the cautiously optimistic camp, but Shirin, I agree with what
Uday... a third camp now.
I agree with what Uday said. I think the bigger issue is the kind of government indebtedness to GDP that we've seen really spiral away in the last 1 or 2 years. That is something that clearly is, we've seen that play out in Brazil and Turkey, where it has played havoc with the other macroeconomic factors also. And the last 2 years, in fact, we've seen, including India, the government debt to GDP really go up. So next 1 or 2 years will be about how governments manage the fiscal deficit, as well as using the monetary policy in a way that growth is sort of enabled, but at the same time, there's prudence in how you manage the fiscal deficit.
You know, we've got the budget round the corner on the 1st of February, and many would argue that perhaps monetary policy has done its part for now in the context of the fact that we're now seeing inflation rise and a move towards a tighter interest rate scenario. So the pressure then is going to be on the government to try and stimulate the economy and stimulate growth using tools in its power. What is your expectation, Zareen, as far as what the government can do at this point in time come the budget?
So I think, Shirin, the government, to be fair, has done a lot in terms of the ECLGS and been prudent, rather than and using a lot of ECLGS, PLI, which is not immediate outflow, but also stimulates the economy. I think what really needs to be done is focus on health, education, and more of PLI, because that is clearly WTO compliant, brings manufacturing back into India in a meaningful way, and really fiscal prudence. I think these are the few things that is expected.
Okay, let me get the two men who are watching the startup ecosystem very, very closely to comment on what they see as far as 2022 is concerned. Monish and Sanjeev Bikhchandani, let me address what we are currently seeing happen. To Mr. Kotak's point that we are going to see a move towards a tighter interest rate scenario. What that does to fund flows is the big question at this point in time. Monish, let me come to you now, because the big debate is on public market valuations versus private market valuations, which are irrational, and how irrational has the private market really been? How do you see this in the context of the shakeout that we've already now started to see happen?
Sure. So first point, as Uday mentioned, right, rates will go up. As rates do go up, there's a recalibration on what you're willing to pay for cash flows that are going to come to you in the future. Public markets clearly have reacted to that and have reacted in quite a significant manner, not just in India, but in the US as well. If you look at what's happened to fintech stocks and other fast-growing stocks, public markets have taken into account the fact that rates will go up, and as a consequence, those valuations have come down. Private markets historically and always have lagged what happens in public markets, but they're not so far disconnected. So what's happened in public markets, we are going to see spillover effects of that into private markets as well. I think valuations are getting recalibrated. But what is undeniable, Trine, is that, look, this entire pandemic in the last 18 months, 24 months, the shift to digitization, the shift in fundamental consumer behavior when it comes to shopping, when it comes to how we pay for things, when it comes to health tech, ed tech, that shift is here to stay. So from a attracting capital point of view, yes, if rates go up, capital gets more expensive. Public markets are reflecting that. Private markets are starting to reflect that. Capital gets more expensive, but I don't believe there will be, for funding businesses with strong unit economics that are fundamentally solving pain points, there will be enough capital available.
Yes, there will be enough capital available, but perhaps the era of abundant capital, that might see a bit of rebalancing. Sanjeev, what do you make of the implications of this rebalancing, as Monish is pointing out?
No, I agree with it completely. That there will be, investors will be a little bit more discerning. You see, there are some investors who come in late stage, who come in pre-IPO. Some of them have a mandate to do both public markets and private markets, and both India and other markets. So if they find that there are some opportunities in the US that are now cheaper, they might take some of the money away from private market India into public markets. But there are a whole bunch of investors who have committed capital for India, only private markets. They will stay. But they will get a little bit more discerning, a little bit more selective. And that will ensure that startups have to work a little bit harder, be a little bit smarter in order to get valued and in order to get funding.
Speaking of getting funded and a health check as far as startups are concerned, Mr. Kotak, I want to address that issue with you, because you did talk about the fact that Cinderella times will not last forever, and you believe that the clock is going to strike midnight very quickly. What do you make of the kind of rush and the kind of boom that we saw through 2021, and what you foresee going forward?
So, Shireen, first of all, I believe that the startup ecosystem is broadly robust and deep. What we need to ensure is that as this system evolves, we avoid irrationality. We don't take decisions which don't make sense or common sense. And ultimately, a firm must produce cash flows even if they are in the future. And a fair value, present value of those cash flows is important. But we must encourage entrepreneurship because change is inevitable. Think about Facebook 10 years ago. When it was listed at 30 billion market value, there were cynics who said that it is overvalued. And in fact, post-listing, it did go down. But look at it 10 years later, it's a $1 trillion company or around. So companies must be able to have a strong business model. We also need to ensure unit economics, because in the process of growth, I may be very aggressive in acquisition. And along the way, I must ensure that I'm getting my unit economics right. Therefore, what I mean by Cinderella times getting over is people funding without looking at visibility of cash flows, or at least being able to imagine potential cash flows in the future, and not looking at unit economics, but just putting in the money because that's the fashion of the day. That cannot last. So I'm making a distinction. The startup ecosystem will sustain. Good, solid private equity, angel and venture investors who do their homework well will continue to do well. But fuzz fuzzy money or fizzy money will not last.
Fuzzy money or fizzy money will not last, but what will last is the move towards digitization, something that Lakshman had spoken about at the very start. Salil Parekh, let me get you to comment on that. I mean, we've seen a blowout quarter for tech companies like yourselves, and what is very clear is that tech spending will continue. You and I chatted about this, and it seems very clear now that we are in a multi-year upcycle as far as tech companies are concerned. What do you believe will be the factors to watch out for from here on, given the fact that we've already seen this significant growth momentum build up over the past 2 years?
So there, Shireen, I think globally, large businesses are completely focused on their digital transformation, leveraging digital technology to connect with the consumers, to connect with their employees, to connect with the ecosystem, to leverage the payment infrastructure. And that is the driver today for all of the digital work that's going on. What we are seeing is this move is fundamental and everyone is moving to it, some at extreme speed. And this is where you see some of the disruption from the startups, and others are going very steadily, but slowly moving ahead to get all of their enterprises done. So this approach of converting all of the activity to a digital activity is what's really going to drive the next phase of the growth across the world. Yes, there are other factors which relate to interest rates, which relate to inflation, but the fundamental change where people have seen behavior that benefits from digital, that's what's going to drive the growth as we see the next several years coming about.
Yeah, that seems pretty evident at this point in time. But Suresh Narayanan, let me ask you about the demand visibility at this point in time, given the fact that we are seeing some of these risks being baked into growth estimates. What does the pipeline in terms of demand look like, both urban as well as rural, at least as far as India is concerned?
Thank you, Shireen. I think firstly, in order to join the camps, I would say that I'm also in Zareen's camp of being cautiously optimistic. And that's because we have to see the back of this pandemic before we shout hurrah and really think that everything is going to get back into complete normalcy. Before I answer the question on consumption, I think one of the issues, and since my company represents a largely agro-based supply source, I think one of the things that is really biting us is inflation. And inflation in commodities is not just happening here locally, but also happening globally. In fact, some of the commodities are seeing 10-year highs. So it is not a question of just seeing the last 12 to 24 months. They are seeing 10-year highs. And during this period, I think some of us have the dilemma of whether we need to take sharp price increases in order to mitigate some of the commodity costs, or indeed take a hit on the engine of growth for our companies, which is volume. And if penetration and volume-led growth were to come down substantively, then we are going to face probably a short-term issue. We will have positives in terms of organic growth, but longer term, we'll have probably a slightly more muted situation. So today, the way I look at it is that consumption would really be dependent on how we are able to contain inflation. Budgets are squeezed as far as consumers are concerned. I think there has been a lot of distress in the economy itself in terms of employment and other things that I need not elaborate on. How this is able to come back post the last that we see of the pandemic is going to be important. Rural is a cause for concern. I think some of us have had strong rural growth. Almost 40% of consumer goods consumption comes from rural India. That is not looking particularly great at the moment. How that comes back is going to be important. And finally, I think employment generation. I think we come back to the same picture, the same record as far as the economic activity is concerned. Creation of employment would also determine the kind of robustness that we see in demand. So again, while I see the signs of improvement and the signs of the change happening, I believe we should not underestimate the incline of the mountain that we need to climb.
Yes, and you're right in pointing that out. It is looking challenging, especially in light of the many factors that you just brought up. But Kiran, let's close the camp argument here and the camp debate here. Cautiously optimistic, widely optimistic. Where do you belong?
Well, as far as the pandemic is concerned, I think we all have to be cautiously optimistic because it ain't over yet. But having said that, I think we do need to accept that this pandemic is going to move into an endemic phase fairly soon. So from that point of view, I think we should start preparing ourselves to get into some kind of normalcy. But in terms of our sector, when I look at the healthcare and pharma sector, I think I'm very optimistic because the world attention has focused on increasing healthcare spends, and to that effect, I think the pharma sector is going to benefit. As far as India is concerned, I certainly would like India to move up from 4% of the value capture of the global pharma market upwards of at least 15%. And to do that, I think we have to move into innovation big time. And in order to do that, I also believe that we will need to up our investment in R&D, and I have been engaging with the government to see if we can follow the PLI scheme with a research-linked incentive scheme because of the the gestational nature of return on investment in pharma R&D, as well as the fact that it is high-risk investment, much like what is happening in the startup ecosystem. So I do think we need more fund flows in R&D, and we need incentives for people to really seriously invest in innovation. And without that, I really don't see how we are going to really move up the value chain as far as pharma is concerned. Another aspect of the pharma industry at the moment is the challenges we have in terms of increased input costs and logistics costs. And I think that inflation is also something that will add to healthcare costs. And we need to sort of find a balancing measure to see how we can basically address that, because otherwise, we are going to see increased, inflationary trends in terms of our products and services.
Well, at the very start, we've got the number one issue, the number one risk, the number one threat that could derail economic recovery. I think there is consensus on the panel. Inflationary pressures, rising commodity costs, rising input costs, that is a chief cause of concern. But Lakshman, I want to come back to you now and address the larger issue of this new normal. We have seen structural changes. There are some changes that have been perhaps more transient than we would have thought they would have been. But in terms of workflow, in terms of workforce, in terms of wages, how do you believe the next 12 to 24 months are likely to pan out if we look ahead and assuming that this is now going to become much more endemic, the pandemic?
Your question on structural change, there is certainly a demand factor, which I think Manish addressed as well, around some of the behavior change we're seeing, which in many cases is actually quite permanent. And it certainly provides a lot of opportunities for consumer companies like ours to look at consumer behavior and see how we can capitalize on it. On the supply side of the question, on the resilience aspect of it, particularly as you talk about workforce, 70% of our people go to work every day, and they have gone to work through the pandemic. There are people in factories, there are people in R&D centers, there are frontline and selling. And there's a lot that's gone into ensuring that we keep them safe and we keep them very productive. I think we have 30% of our people who are sort of, I would call the white collar people, that I know we talk a lot about in terms of workforce and how are we going to actually manage them. On labor cost per se, I think we're seeing in different markets things move in different directions, but we're clearly seeing a pressure to move upwards. We're seeing that in the US, for example, significant increases in labor cost. It's driven in great part by the fact that we have labor participation going down. The pandemic has been particularly hard on labor, particularly women in labor. When children don't go to school, they aren't vaccinated, and you have them at home, you see a drop-off in women in the workforce. And so that's a real challenge. So clearly over the next couple of years, as we start to move into more of a normal setting, hopefully labor participation goes up. And with that, hopefully we will see some sort of pressure easing on labor costs, which are high right now. On the white collar workforce, I think the big challenge is how do you ensure when you're working the way we are, that we drive collaboration, that we drive coaching, and we drive connection and communities for all our people. It isn't all that easy. And at the same time, what we have learned through this pandemic is the need to deliver flexibility to our workforce. So labor costs are up as we see participation down. Hopefully with participation, we will see some of that easing. But I think the bigger challenge long term is how we ensure we look at the way we are working and evolve it to collaborate, to connect, to coach, and at the same time give people the flexibility that they've learned to live with over the course of the pandemic.
Mr. Kotak, let me address that issue with you. One of or some of the factors that we are dealing with, not just here in India, but globally more so, there is the issue of debt, there is the issue of deglobalization, there is, as Lakshman was pointing out, an issue as far as productivity is concerned. When you put all of this together, what do you believe the implications and the impact will be for businesses over the next 12 to 24 months?
Sireen, who is the question to?
To you, sir.
No, I think we are actually in a world where we are getting into a combination of a new next and a never normal. Therefore, things are going to be very different from what our pre-COVID world has been. And at some level, it's an opportunity of a whole new planet of change. Therefore, we will have to rejig our minds. But when I look at the future, there are two areas which we need to be completely refocusing ourselves on, and that is education and appropriate employment. Education has been very badly hurt over the last 2 years, and we really need to get it back at speed. Kids have lost a precious time. And as far as employment is concerned, we are seeing again a two-speed engine. On the one hand, there is an acute shortage of talent. For example, the technology talent in particular, and many other segments where we find a huge shortage of talent and the price of talent shooting up. On the other hand, there are pockets where people don't have enough employment. And the whole challenge of reskilling people, making them appropriate for the new world in the post-COVID era is going to be extremely important for governments and policy. And business and government will have to partner together to take care of the new employment challenges and opportunities of a scale we have never faced before.
So what would that then mean? If I were to ask you to put that into context of policy imperatives, we've got the budget coming up. If you believe that that is going to be a significant challenge, which would also then require significant investment, what would the policy imperative be?
I think the whole area of skilling, getting best of talent to get into the area of teaching, education has to be a priority. Best of technologists need to be able to spend some time to be able to spread the way the new workforce needs to work. So our whole education and employment system will have to reorient, reimagine, and change how we work. And we are finding it at our workplace. There are pockets where we have a huge scarcity of talent and people. And there are many other places we are actually finding that there are too many people for the level of jobs which is going to be the post-technology world as we go forward. Therefore, how are we going to create these jobs? And that will ultimately bring us to the macro issue that which is going to be a pressure point, that if there are lots of people who may not be employable in the new world, how are states and governments going to take care of? And do we see ultimately an era of universal basic income coming?
Well, that is a much debated issue, a universal basic income. It didn't find its way into the budget last time around. Will there be any mention of it this time? We don't know. But Monish and Sanjeev Bikhchandani, let me address the issue that Mr. Kotak raised. He called it the new next, the never normal environment that we're living in. And that would be apt for the startup ecosystem to capitalize on. Monish, let me start by asking you, in light of what we've already seen happen, the kind of business opportunities that startups have focused on across across different sectors, the kind of capital that's come into the sector, 40 plus unicorns and counting. What do you foresee now as we start to see much more maturity, hopefully, coming in?
So I think there are two components to it, right? One, the opportunity set, I think, keeps increasing. We're seeing changes, even Lakshman mentioned that point, we're seeing changes on the demand side. We will see changes on the supply side to make that more efficient, to make that more cost effective. So the opportunity set in the different sectors, and the sectors are pretty wide, right? Obviously, fintech, edtech, health tech, opportunity set will increase. I think companies that have strong business models that are solving a real pain point will continue to attract capital. What has changed is the cost of that capital. Right, the cost of that capital is very visibly changed in public markets, and it is changing private markets like, so it's changing in private markets as well. So I think as the world evolves, as the world changes, from a startup point of view, if you are using technology to fundamentally alter or make a certain business or industry more efficient, opportunity set increases, funding is available as long as it's a sound business model with somewhat proven unit economics. The cost of capital is higher now than it was previously, and that's okay. Companies will adjust to that. Companies will have to retool their operations to adjust to that. So again, going back to your first question, which camps? I'm cautiously optimistic as well. In fact, I'm a little bit more than cautiously optimistic, because I think this new normal or this new next and never normal will throw out more and more interesting investing opportunities in startups.
Sanjeev, are we likely to see investors like you go out there and place big bets, or do you believe that at least for the near term, there's likely to be a little bit of a pause? Will the brakes come on?
The brakes won't come on. Investors will become more discerning. They will be a little bit more cautious. They will not invest in a hurry, but investment will continue to go on. As far as we are concerned, we don't invest big, we invest small and then keep on doubling down. It becomes big eventually, hopefully. But look, fundamentally, you've got to understand that when you print $5 trillion of money and you inject it in the US economy, and this capital finds its way all over the world, everybody looks smart. Now, it's when this capital recedes a bit, this liquidity recedes a bit, is when you discover, who are the really smart and robust startups and who are not. I think that phase may be coming.
And that is something that Dipinder Goyal of Zomato also alluded to, that when it gets tighter in terms of funding, it is the execution challenge and the people who deliver on the execution challenge that is going to be valued much more. But Suresh Narayanan, in the context of this new next and never normal, now for a business like yours, what does that mean in terms of portfolio, in terms of driving themes like sustainability as core business ideas, core business propositions? How are you reading, the long-term scenario at this point in time, in terms of the choices and the bets that you will have to make?
I think, Shireen, these are probably, I call it exciting times. I call it exciting times because this time really calls for introspection by leadership and policymakers on where they want to take society to. And I'm fond of Kabir, and Kabir said this beautifully. He said it, "Bura jo dekhan main chala, bura na miliya koi. Jo dil khoja apna, mujhsa bura na koi." I think this is a time for us to take a look at our work cultures. I always believe that if companies were to invest more in culture than capex, we'd have a lot more better run companies. We don't invest in it in good times. We invested it in bad times, and it doesn't really work. I think work is getting recalibrated. Talent is hard to find. I fully agree with people on the call. But talent, and fortunately young talent in the country and in my company, they work for more than just money. They work for a cause. They work for what the company stands for in terms of purpose and values. I think that is going to become very, very important. Workplace practices are going to become extremely important for us, be it in terms of work from home or work from anywhere. A lot of this is being revisited because these were topics that were really not on the table before the pandemic. Finally, I think sustainability. Sustainability is not a corporate do-good; it is a consumer need, and let's be clear about it. I think consumers want to have brands that are clean, that have got a purpose, that do something for society, and that stand for a purpose much larger than what they represent purely as a brand. So sustainability initiatives, I believe, will carry on because that is an essential of the business. And I believe that that companies will have to, as Manish rightly said earlier, will have to tweak their business models to see how they are able to manage this challenge of the worker, the workplace, and the worked upon. And these three elements would become very, very important. So the companies which have got the most robust practices in this, the most open minds, and probably the most vibrant cultures will be the ones who will ultimately succeed in this game.
Oh, I agree with you on the issue of culture, but I think CapEx is equally important at this point in time, especially as we wait for private CapEx to pick up, and we've been waiting for that for long. So Zareen, what's the expectation? Is 2022 going to be the year when we see a revival of private CapEx?
Shane, actually, private capex investment starts when you have capacity utilization in excess of 70%. I don't think we are there right now, but hopefully in second half of this year, we may see capacity utilization going up and private sector investments coming in a meaningful way. We have, of course, seen a lot of investments coming on the back of PLI. I think that also will have a cascading effect, which will be meaningful. And if government has more PLI schemes in the coming budget, that also will sort of, in a way, give the spark to the sentiment of private sector investment. I think the government investments should proceed in infrastructure and power sector reforms, etc., should precede the private sector investment. Having said that, I think one place where we are seeing serious private sector investments already starting is in the ESG space. In fact, Asia Pacific is expected to lead the way with more than half the global ESG investments. And what we'll see, Shireen, also is that what we call greenflation will happen. Because people are going for the more expensive green investments, we will see a little bit of inflation triggered by that also, which will play out in the next 2-3 years.
Oh, you're right. We're already seeing greenflation. That is a reality that we are going to have to live with as we move towards a cleaner, greener way of doing business. But Mr. Kotak, let me address the issue of culture, capex, and now consolidation, because what we saw through the course of 2021 was really a deal-led recovery. Do you see that continue through 2022, both inbound as well as outbound?
Yes, I think we're going to see a significant consolidation of businesses, big becoming bigger. At the same time, it is always good to see the startup ecosystem out there with small companies testing the big companies over time. So I think the companies which will face the biggest challenge are the companies in the middle. Either you become big or you will have yourself as a middle player, pressure both from the big and from the startup system. And this consolidation will be ultimately certainly value accretive as we go into the future. But the issue is that if the middle gets hollowed, how are we going to ensure long-term employment for a large number of people in the future?
That is going to be a challenge. Lakshman, how are you looking at the era of consolidation as the big get bigger, and especially in light of potential partnerships and collaborations with the startup ecosystem as well?
You know, on the startup ecosystem, I think we have found India to be a terrific source of ideas, a terrific source of innovation. And, we intend to capitalize on that. So, we have our venture fund operating in India. We have made a few small investments in companies, both to learn, but also to share, what is it that we're doing that can actually be helpful to them. And the expectation is that India being such an important market for us, we expect to participate even more extensively in the Indian startup ecosystem.
Okay, that's good to hear, and that is good news for startups who are looking at potential partnerships as well. Kiran, as we look at opportunities, and you've spoken extensively about the need for greater degree of incentives to promote R&D, but if I were to ask you about the number one opportunity as you look about the partnerships that you're getting into, the deals that you're potentially looking at this point in time with the likes of Serum, etc., what are the opportunities that you believe we must capitalize on? as a nation and, of course, you as a company?
Well, I personally believe that India has a unique opportunity to play a very dominant role in pharma biotech. And I really believe that this is an opportunity to focus on investing in a much bigger way, both in R&D and manufacturing. I think we are not investing enough in biomanufacturing. That's an enormous opportunity for India. And I think we need to really step up our investment in R&D. I think serious investment in R&D is the need of the hour for the Indian pharma biotech sector. I also believe that we have a very large opportunity to scale up many of the innovative startups that we are seeing in this sector. And that is really my biggest worry, because we have a huge mushrooming of very innovative startups. But where I see the challenge is really the scaling opportunities for these companies, which is really about access to capital. And I really would love to see a day when we have access to capital markets for many of these companies which are R&D driven. I don't still see signs of that for the life sciences startups.
Okay, let me get each one of you to give us your closing comments. And Mr. Narayanan, I'll start by asking you. We've talked about the opportunities, we've talked about the risks as well. But if there were to be one area that you as a company and as a leader intend to focus on through 2022, what will that be?
Really grow with compassion. Grow as a company, but we grow with compassion all across the ecosystem, whether it is our partners, whether it is our people, whether it is our farmers. I think growth with compassion would really be something that would be an important theme as we come out of this pandemic.
Salil Parekh, your number one agenda as CEO?
For me, really, it's all about the people. There was a lot of discussion on skills, availability, reskilling. For me, it's critical that we have to be much more focused on what are the needs of the people that are part of this workforce. How is this work from home, hybrid? How is a flexible model going to work? How are we going to reskill? We have an enormous opportunity to create massive employment within the country, which we need, not just from services, but from manufacturing. But the key is really making sure that the people remain engaged.
Monish, what will be the priority as far as SoftBank is concerned, specifically for India?
So as an investor, look, this is an exciting time for us. The opportunity set has expanded significantly. Valuations have obviously corrected, which makes it great for us. So continue to look for market-leading tech-enabled companies. And to Kiran's point, we've been prolific investors in life sciences in the US, but haven't done enough of that, or very little of that in India. And we hope to do more of that in the coming months and the years ahead.
Sanjeev?
Us, it'll be investing in innovation, product engineering, continuous improvement, and hopefully growth with some predictability.
Growth with predictability. Don't we all want that? Zareen, what's the focus area?
Yeah, so it will be helping our clients transition to net zero, because we're seeing that as a very big agenda. And going forward, I think it will be a bigger and bigger agenda for a lot of our clients. So handholding them through the whole process and being a partner with them in that journey to net zero.
Mr. Kotak, what is going to be your big focus area, and what do you believe the government needs to focus on as well? And more importantly, for people who are watching this, many first-time retail investors who are looking at the stock ticker and wondering what in God's name is going on, what would your advice be to them?
Shireen, you asked me two parts of the question. So first I will answer, which is go for growth and scale, focus on consumer, technology and talent, and have a business model which is having the resilience to turbulence along the way. And as far as my 2 bits to the retail investors is concerned, that any ride is never a one-way ride. And think about the game you played as a kid, which is snakes and ladders. So you love the ladder. Once in a while, there's a snake as well. So manage it, but ultimately you got to reach the top of the charts.
And we hope that many more people do get to the top of the charts. Lakshman, I'll give you the final say. You started by talking us through what you were looking at on your dashboard, both in terms of red flags as well as opportunities. As we close the India Business Leader Awards for this evening, what is it that you would like to leave us with in terms of imperatives and priorities?
Well, I think the biggest imperative for me with the company I run is culture. You know, we're a company of owners. 55% of people in my company own shares in the company. And that makes us very different. We create, we deliver, but also we do it with care. Those are the four things that really, in some ways, encapsulate what our culture is about. I know we're going through a period of transition in the world. There is deceleration, there is tightening. There's obviously challenges on the horizon with inflation, with supply, with moving from endemic, from a pandemic to endemic. But in that context, we focus on our consumers, we drive growth, but actually what makes us really strong in the long term is our culture. And that's my big area of focus as well as here.
Well, ladies and gentlemen, it's been an absolute pleasure. Thank you very much for joining us here to take us through your insights on navigating 2022. It's very clear there are opportunities that one should focus on, but in the near term, there will be plenty of challenges specifically to do with rising inflation. That needs to be navigated and navigated well and judiciously. But thanks very much, as always, for joining us to take us through your actionable insights on what the government as well as corporate India needs to focus on. Always a pleasure. Appreciate you joining us. With that, it is time for us to wrap up the India Business Leader Awards jury deliberations for the 17th edition. Stay tuned to CNBC TV 18. We'll be right back with you with a lot more.